Hi everyone, welcome back to ASX Market Watch and charting trend signals around the world. Guys, thank you so much for joining me. It's a huge week this week. We're looking at Elliott Wave signals and counts, just the Elliott Wave counts as I see them. Elliott Wave is a great tool that people use for forecasting. I'll talk more about that later on, just the warnings and pitfalls, obviously the do's and don'ts with Elliott Wave. My most favorite method of actually looking at the charts is the actual price action. So yeah, just checking out that. We're looking at the strongest sectors. So in other words, the sectors that are outperforming the index, like our regular index, like the All Ordinaries, we're looking at that as well. And of course, we're looking at regular trend signals like we always do, which is the actual price action. So yeah, guys, apologies in advance if this is a little bit longer than usual, but we're going through a lot of information. First up, we're looking at where the indices, so in other words, the indices, the strongest indices at the moment, on the Australian market on the ASX, just really quickly before we get into the other ones. To do that, we look at relative performance. As you can see, this is the industrial sector, absolutely killing it as opposed to the All Ordinaries. The All Ordinaries is the blue line there. Industrial sector is the red line. As you can see, we called this probably about 6 weeks ago, maybe 2 months ago. And in the meantime, I've been taking individual trades in the industrial sector. Has been going absolutely beautifully. That's another story. Let's just really quickly check out the ones that I've seen. Healthcare is marginally outperforming the All Ordinaries. That's the red line there. And that's versus the blue line, which is the All Ordinaries. Really quickly, I think property, amazingly enough, is actually still doing well. So Australian property is holding up. As you can see, that's the red line versus the blue line, the All Ordinaries. And one of the other major ones, obviously telecommunications, still outperforming, has been outperforming for quite some time, and utilities, although it's starting to falter now, as you can see, this last little dip down here at the end, it's still well above the All Ordinaries, so it is still performing on a year-by-year basis. Pretty much, I think those are the main ones. Healthcare and industrials are the ones that are sort of recently outperforming the All Ordinaries. Okay, so that's that. Now let's look at the price action, and again, apologies if I'm rushing through this, but there's a lot to get through. The first one I'll look at is the All Ordinaries. Really quickly, it still hasn't. We've been waiting for this close above 4,400. Still has not happened. That would be a medium-term buy signal for myself on the All Ordinaries. But yeah, so hasn't happened. Even though we've seen individual sectors like the industrials just before, guys, that has started to go off. The overall sector is still being dragged down by some of the weak players. In the meantime, I think the main ones, financials is sort of a bit ho-hum at the moment. Materials is kind of dragging the All Ordinaries down a little bit as well. So, in other words, for a solid trend signal, I'm still waiting for that 4,400, and it hasn't happened yet. Now, let's look at an Elliott Wave point of view. A few months ago, actually back in 2011, I did an Elliott Wave count. Now, well, really quickly, let's just check out what I was talking about back then. So, Elliott Wave, as you know, has 5 waves up, 1, 2, 3, 4, 5, and then ABC correction down. So what I was looking at particularly, this is my count from last year. So it was 1, 2, 3, 4, 5, and then 5 around about here, and then A, B, C. So in some cases, the B wave, which is this one here, can go above the 5th wave. The exact same thing happened in 2010. So we had, in other words, 1, 2, 3, 4, 5, and then A, B, C. Now that is where, in the middle of 2011, that's where I made the Elliott Wave count as I saw it back then. Back then I was hoping for that to be the end of the C wave. However, I said if it fell below that level, obviously that would make my count invalid. Now, fall below it, it did. So what we got instead was it's still a C move as I see it. So in other words, A, B, C. It's just that the C move went a lot further than I expected it to. And obviously that was, let's have a really quick look. It was actually still within the boundaries of Elliott Wave as well. In fact, there's your 161%. 261%, that's pretty much almost spot on to where it went to, and that's, yeah, basically that's one of the places that you would expect it to go, between 100% and 261.8%. These are just Fibonacci levels that Elliott Wave practitioners use, so these are some of the things that they do look at. So, in other words, if this count is still valid and we've got ABC, what we're looking at is a potential new wave 1, 2, 3, 4, 5, which is an impulse wave, it's an up wave, it's an up move, and what that means for the market potentially now is that we're seeing a very similar thing to what we've seen recently, 1, 2, 3, 4, 5. In other words, this one will be 1, 2, 3, and I'll see if I can move this a little bit. 3 being the longest wave. Usually, let's have a really quick look. 161.8% is the most common level, and that would bring us to 5,000 on the All Ordinaries. Now, again, look, if you want to combine this with your solid trend signals, obviously I would prefer to do that. That's personally, look at the price action, guys. Price action is very important. 4,400 is still that level to beat for me personally. If it closes above that, that would be a happy day, and that would potentially give us a trigger for the market going into a wave 3, according to Elliott Wave theory, and potentially seeing a level of 5,000 on the All Ordinaries. So really, I just hope that helps in some way, shape, or form. And apologies if that sounds like gibberish. Really, yeah, there's a lot of information there, like a lot of information. So if it didn't make any sense, first of all, I apologize, but also don't feel bad because yes, there was a lot of information to catch up on right there. The other alternative thing that we could be looking at is as in A, B on a longer term basis, A, B, and then C. So still that is on the cards, but obviously, yeah, these are just the ways, and that's why Elliott Wave is a little bit more subjective. Obviously, you can throw all the predictions you want at the market, but at the end of the day, price action is still king.